Welcome to the latest Motley Fool scoreboard. I'm on in Chockville, and we've got longtime fools Travis Hoyam and Jason Hall giving a 1 to 10 rating to the company whose chocolate isn't too waxy. Darn it, it's Hershey. Ticker symbol HSY. As always, we'll do a 10-second bull bear. We'll rate Hershey's business, its management, and its financials. We'll talk valuation, and if there's time, fools, we'll play Armchair CEO, and we will top it all in about 12 minutes or less. So let's get to it. Jason, tell us more about Hershey. There's more than just the Hershey bars.
Yeah, there is. Hershey's one of the largest manufacturers of chocolate, candy, and snack foods in the world. Of course, our good friend Travis was eating a little bit of the popcorn there himself. And here's the thing. It earns very high returns on investment, strong margins, has a really long track record of creating value for shareholders, turning revenue into more profits, growing its dividend, and buying back shares too. The bull case thesis, you could say the crackle thesis, is that it continues doing what it's proven best at, creates value for shareholders, and generates good returns. The bear case, maybe the special dark case, as it were, is that changing consumer tastes will erode Hershey's advantages. It loses shelf space, loses market share. That takes a bite out of profits, hence lower returns for shareholders.
All right, the bull case can't be crackle. That's just not as good of a Hershey or a Nestle Crunch, but we get where you're going, Jason.
Well, see, that's shopping on a different aisle, though. We can't go to Nestle here.
Okay. Travis, how do you rate the strength of Hershey's business, including factors like industry and its competition? It's a tough space. 10 is invincible, 1 is hopeless.
I gave this a 4, and I think this is one of those industries you have to look at the overall industry and what's going on, not just Hershey. Because I think when you look at their brands, I love a lot of their brands. We buy a lot of them for ourselves, for things like candy, but also for our kids, Pirate Booty, Dots Pretzels. But the supply and demand dynamics have changed in the grocery store over the past 20 or 30 years. I remember going to the grocery store as a kid. There wasn't 45 different kinds of Reese's peanut butter cups or, Hershey's bars. There was 1 or 2. There wasn't, 40 different competitors in those aisles. There was 1 or 2. And so the supply used to be the point of power. And with things like the internet, with more specialized grocery stores and retailers, you started to have these smaller brands creep up. And basically everybody has to carry them now. And that takes a little bit of power away from Hershey. That's why you're seeing, kind of tepid returns from them. They haven't gone down results haven't gone down the drain like some companies have, but they're in the same kind of steady as it goes business at best that a Kraft, a Procter & Gamble, General Mills, all these companies are kind of facing the same supply constraints as demand becomes more powerful in the market.
Yeah, I think there's definitely risk there, but I see it a little bit different. I don't think we're seeing the same erosion of brand power as a lot of other consumer packaged foods are dealing with. This is an exceptionally well-run business. I think it still has some pricing power, and it's large enough in scale that it does get cost advantages that do still make it challenging for upstarts. Yeah, the barriers to competitive entry are certainly lower. There's no doubt about that. But I do think the durability and the power of their timeless brands is still there. You look at the returns, consistently getting 20% plus operating margin. So they're able to turn modest growth into stronger earnings and dividend growth. You look at the returns of the business over the past decade or so, even the stock's down around 27 or 28% over the past 6 to 9 months from the high, but it's still generated around 10% in average annualized returns over the past decade. That's market average. That's not terrible. To me, that's worthy of about a 7.
Shout out to other brands that they own: Skinny Pop, Whoppers, Jolly Rancher. They have a lot. They even have Cadbury. Travis, let's talk about management. A 10 is Warren Buffett, who sees candy, and 1 is Homer Simpson.
Michelle Buck's been there for about 20 years. I think this is one of those cases where the management team, Jason is probably right, that they're very good at what they do, but the problem is more to do with the industry dynamics. So can Hershey's get around those general industry dynamics? No, they can manage through them as best as possible, and that may be the best outcome, but that's why I only gave it about a 5.
I'm a big fan of Buck. I'm a big fan of their management team. They have a pretty strong board too, with a lot of people across this industry, and I think that's a very useful thing to have in setting your corporate strategy. So I give management a 7. A couple things love to give them a higher rating. And if you think long term, managements that are earning higher ratings, what do? They give really good returns to their investors. So again, about 10% annualized returns over the past decade. That's not bad. That's good. But it's certainly worse than you could get by owning just a low cost index fund. When you put that into play, you have to drop the rating that they get. So I came down with a 7.
All right, let's move on to financials, Travis. A 10 is a fortress, a 1 is yikes.
I'm pretty middle of the road here. I give them a 6. Their financials are fine. They're not declining. Depending on which one you're looking at, their operating margins are up slightly over the past decade. I think that is a good trend. Shows you do have at least more pricing power than a lot of your competitors in an increasingly commoditized market. But I can't really go any higher than that. So I think they're fine. But like Jason has said, if you're just going to kind of do market average, you can't go too high with some of these results.
Yeah, I think that's fair. But in terms of looking at the financials, I think if you think about the returns that they generate, it's worthy of a higher score to me. And I gave it an 8. The debt load's manageable, tons of working capital, doesn't carry a ton of cash, but they have a lot of working capital. You look at their returns on assets, their operating returns consistently getting better than 20% operating margins. Cash margins are above 15%. That's very, very good. I think the risk here is punishing the financial results of the business too much because it's a challenging, relatively low growth industry. This is an extremely, extremely mature industry. So I think that's one of the realities, is that you're not necessarily going to get gigantic growth and returns from that, but exceptional returns from the niche that they're living within.
All right, Jason, let's move on to valuation. Quant team rates Hershey as cautious on the cautious, moderate, aggressive risk reward spectrum. Makes sense. How well will Hershey's stock do over the next 5 years? And what's your safety rating on it? Keeping in mind a 10 is a sure thing, a 1 is a lottery ticket.
So we can kind of work backwards here and think about the safety of the business. Talked about the returns that it generates, the stability, the positioning it has in the market, how good they are as operators. And it's a pretty safe business, especially when you think about actual valuation. The stock's come down a lot, and to me, it's gotten into value territory, enough so that I've actually added to my existing position that I opened a few months ago, sometime in the past couple of weeks. So from a safety perspective, I say a 7. For me, that means that your chances of losing money are very, very low. You have very high probability for a 5-year plus holding that you're going to make money. Are you going to beat the market? That's a little bit tougher ask to say. So I say the high end of 5 to 10% based on the valuation that you're paying right now. And it's a safe investment. Is it going to beat the market? Long term, it really hasn't been a market beater. But if you're looking for income and a growing dividend and some stability, again, 5 to 10%, I think in the higher end is where you're going to get.
Yeah, and I said 0 to 5%, just to put some context to that. The price earnings multiple is about 21. I think that's pretty expensive for a company that has a compound annual growth rate of 4% over the past decade. So I don't have very high expectations. Yes, I think it's probably going to be hard for the company to lose money over that period of time. And as a result, I think we're pretty middle of the road as far as safety goes too. I gave it a 5 from a safety perspective. That's probably a little bit harsh. Probably could have been a little bit higher on the safety side, because this is one of those companies that isn't going anywhere. I just think, like Jason has said a couple of times here, the return expectations need to be pretty muted when you're looking at Hershey.
We're going to skip Armchair CEO in the interest of time and move on to everyone's favorite topic. Jason, is there a company in Hershey's space that you like better?
So staying within this specific space, consumer discretionary spending, snack foods, I don't think so. Like I said earlier, I'm a shareholder and I'm a recent buyer at this price.
Yeah, and I'm looking at who is actually buying stuff from Hershey that then ends up in my kitchen. That's going through Target. And when we look at a company that actually holds a little bit more power in these dynamics now, does Target just start to white label those bags of candy that we're going to be buying here over the next month for Halloween? I think that probably makes a lot of sense over the next decade or so. So that's probably where there's a little bit more power in the market is a company like Target, pretty attractive price to earnings multiple, and probably a little bit more margin tailwind instead of margin headwind like you're seeing with Hershey.
No one wants your Target branded chocolate for Halloween, you Minnesota shill,
Hey,
Travis Hoyam.
you get whatever they give you.
Thanks to both Travis and to Jason. They've given Hershey an overall score of just 5.7 out of 10, short of that 8.0 that would force me to own shares. But it was possibly my largest single stock purchase of the last year. It acts as ballast for my riskier positions. At prices not much lower than today's. I'm with Matt Argersinger and Ant Chavone, who've been bullish on this blue chip stock. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is the King of Malls, including the King of Prussia. Till then, Fool on. Oh, you're recording?
Oh, we're on.
Oh.